Hello everyone, hi. Welcome to the channel of Wall Street Mojo. Watch the video till the end, and also if you are new to this channel, then you can subscribe us by clicking the bell icon. Today we have a topic with us is capital expenditure, also known as Capex. If you go down, there is a graph that's visible on your screen, which says regarding Ford Motors data, capital expenditure of Ford Motors from 2010 onwards, which was pretty high. Then there was a significant decline, mortgage meltdown effects. Afterward, to the point of time of 1.5 2 years, there was a significant rise in that, and the rise was followed by consistency over here, as you can see the graph, and it was $1.981 billion. That was the capital expenditure that was invested. No issues. Let's understand first what is capex. See, capital expenditure is also known as your capex. It refers to the financial out. It refers to your financial outlay for the purpose of buying, maintaining, or improving the fixed asset base. Okay, such as plant, property, equipment of the company. So the money spent is considered for the sole purpose of buying new fixed assets. Okay, repairing what we call the existing fixed assets, repairing the existing fixed assets or upgrading the existing capacity of the fixed asset, and for financial decision of the company, and it must be formally be approved by the annual shareholders meeting or special meeting of the board of directors. Now it includes like buying of fixed assets or sometimes intangible assets. There is also repairs that has been done on the existing asset to improve its life of useful assets. Third, upgrading upgrading an existing asset to increase its performance. Okay, these are the three things. Now, how exactly we are going to do accounting of this particular thing? We'll go step by step process. See, going by the general rule of capex account, if the acquired property, the useful life is longer than the taxable year. See, then the cost must be capitalized. So this cost is not charged to the profit and loss statement at once in the taxable year, but is spread over the useful life of the asset in the form of, it's called depreciation or amortization. First, what impacts does it have? The impact is, there's an effect on balance sheet. So the future or the entire capital expenditure cost is what we call as capitalized on the asset side of the balance sheet, and this increases the non-current asset base of the entity, while at the same time reducing the cash balance of the entity. Okay, second, there is effect on the income statement. See, the capital expenditure costs are amortized or depreciated through profit and loss statement over the useful life of the asset. Third, there is effect on the CFS, cash flow statement. Now, since the reduction in the cash balance of the entity is reflected in the balance sheet as at the end of the taxable year, this financial outlay does not get reflected in the CFS, that is the cash flow statement, under the investing activity. Okay, investing activity section as capital spending or purchase of property, plant and equipment, acquisition expense, and so on and so forth. Okay, now let's understand the formula of capex. See, capex can be calculated using two methods. First is called the gross method. See, capital expenditure formula using gross method is equal to gross property, plant and equipment in the year 2 less gross property, plant and equipment in year 2. This is the gross method. Now second is called the net method, which says the capital expenditure formula using the net method is equal to capex is equal to net property, net PPE of year 2 less net property plant and equipment of year 2 plus depreciation in year 2. Here it has to be 1, not 2. Year 1, and over here also year 1. Okay, so these are the two methods for calculating the capital expenditures. I'll take one example of Walmart. See, Walmart, in case of the Walmart, the cash flow statement, just write some. So the cash flow statement, it can be clearly said that, Walmart had spent closely around $10,051 million or $10,050 million, you can say that, to buy the property, plant and equipment. That was the expenditure that they made. And since the expenditure was towards buying the fixed assets and amount is very huge for it to be expensed in the income statement, at once, the expenditure could be classified as Capex. And more information about the inact nature of the Capex could be found if one digs into the notes of the company, which could be found in the financial filings. Okay, now many times a pattern could be seen in the capital expenditure of the company. Now it could reflect the company is expanding aggressively as per the strategic decision of the board of the company in order to cater the large market share. In order to cater the large market share. See, now I want to make you understand that there is difference between capex is different. It is completely different from other expenditure that you do. See, some industry are more capital intensive and some are less capital intensive, right? So the expenditure of the entity depending on the industry it operates in. So capital intensive industry, like if you see for oil exploration and production, telecom, right? You have manufacturing or utility. They have the highest level of the capital expenditures. Second, the capital expenditure are different from the operating expenditure. Okay, operating, they are known as OPEX or the revenue expenditure. They are fully tax deductible in the same year in which the expense are occur, and also the capital expenditure is non-recurring in nature. It is non-recurring strategic financial outlay that impacts the long-term asset base or something that could not be deducted in the full in the year in which it was incurred. Hence, it is amortized over the useful life, over the useful life of the asset. Fourth, let me take you down over here. For example, buying a new car is capital expenditure, which could be amortized over its useful life, generally accepted to 5 years by the accounting rules and industry norms. Thus, after 5 years, the car could still be in the working condition. Okay, and its value could only be charged to the profit and loss statement only during the useful life of the tax deductible purpose. Now, this were all the details relating to the capital expenditure. I hope you have got a great idea regarding it. And on a concluding end, the capital expenditure decisions are very critical. Okay, to an organization due to the substantial initial cost and irreversibility and the long-term effect. Therefore, budgeting for the capex is ought to be very careful and efficient, planned and executed. So that's it for this particular topic. If you have learned and enjoyed watching this video, please like and comment on this video and subscribe to our channel for the latest updates. Thank you, everyone. Cheers.